Hi guys, Brown Asset Management here, and today I'm looking at something new. This is a stock I've just found with analyst ratings of 117% on the high side and a consensus at around 78%. So this stock is at a massive discount right now. As you can see, this stock has consistently beat its EPS over the last year, and the trends have it as a strong buy with most analysts and a buy with the rest. And the stock is Kinross Gold Corporation, ticker symbol KGC. This company is engaged in gold maintenance related activities, including exploration, acquisition of gold bearing properties, and the extraction and processing of gold containing ore, and the reclamation of gold mining properties. If we look over the share price over the last year, at the start of the year it hit lows of around $3 a share, rebounded massively with the spike of gold to $9 a share, and it's kind of tailed off since then, but around $7.38, which is a buying opportunity according to these analysts. Firstly, the market cap of this company is $11.7 billion. So now to have a look at my 6 simple steps, and the first is P ratio less than 20, and the P ratio here is 6.9, so there's a check mark there, one of the lowest price to earnings ratio I've seen so far. Step 2 is the revenue increasing over the last 5 years, and the revenue has gone from 3.47 billion to 4.21 billion, so there's another check mark there, the revenue is increasing. Step 3 is profit increasing over the last 5 years, and the profit has gone from minus 101 million to in the positive of 1.25 billion. So that's a massive check mark there. The company's gone from negative to positive in these 5 years. Step 4 are the shares outstanding decreasing, and this is actually a fail here, but very close, as the shares has gone from 1.25 billion to 1.26 billion. So it is a fail, very close, so this is good. They aren't issuing too many shares, but still a fail according to the rules. Just want to thank you guys for watching the video. Please leave a like if you've enjoyed it. Give your comments on your thoughts on these type of stocks that I'm reviewing here, which are a little bit different, and consider subscribing if you enjoy investing in stock review videos. So step number 5 are the current assets greater than the current liabilities. The total current assets of Kinross are 2.45 billion and the current liabilities are 1.35 billion. So there's another check mark there, as they can pay off all their liabilities with their assets. Just looking over at their total liabilities, you can see that they can pay off around half. So they don't get an extra check mark for that, but it is a good bullish sign. And finally, step 6 is the free cash flow increasing, and you get the free cash flow by minusing capital expenditures from the cash from operating activities. So 5 years ago, the free cash flow was around $877 million, and that has increased to over $1 billion. So there's a check mark there as the free cash flow has increased. If we look at the previous years of free cash flow, you can see it has been a bit all over the place, with some barely positive free cash flows to some negative, some barely positive again. So it has fluctuated quite wildly. So if we take a price to average free cash flow, which is the market cap minus the average of these 5 years, we get a price at around 32, which is very high. So if we take a price to most recent cash flow, which is 11.8 billion divided by 1.04 billion, we actually get a ratio of 11.3, which is very, very good. One of the best ones I've seen. Kinross does have a dividend with a dividend yield of 1.6% with an annual dividend payout of 3 cents a share, and the ex-dividend date is the 2nd of March 2021. So if you are interested in this, I would buy it before then to get the dividend. So to quickly summarize my 6 simple steps, the P ratio was less than 20 with 8.4. The revenue did increase from 3.47 billion to 4.21 billion. The profit also increased from negative to positive 1.25 billion. The shares outstanding have increased slightly with 1.26 billion to 1.25 billion, so that is a fail. The current assets can easily pay off the current liabilities with 2.45 billion to 1.35 billion, and the free cash flow has increased from 870 million to 1.04 billion. So that is 5 check marks and only 1 fail. So this is really good. This has a lot of solid fundamentals. Do I think you should buy this company? The analysts say yes, definitely buy it. I would do a bit more due diligence on it. See if these gold companies are companies that you like, as the price of these companies are very stuck to the current price of gold. If we just bring up the current price of gold here, over the last year, you can see that it's followed it pretty strictly, with lows again in March and then rebounded since then. Please take a look at Kinross Gold Corp if you're interested. The analysts say this is a very good buy. It's very underpriced right now. I would take a little bit more reserved approach and do a bit more due diligence on it. Right guys, I want to thank you for watching my review on Kinross Gold Corp, ticker symbol KGC, using my 6 simple steps. Leave a comment on your thoughts below, and please consider subscribing if you enjoy investing in stock review videos, and I'll catch you guys next time.